Hi, welcome to the Market Alert for Thursday, the 8th of March 2018. So yesterday in the pound, the market fairly quiet, just trading within two psychological levels there, and then pulling back 76% before moving back up to the top and then becoming range bound. And on the overnight, a very narrow range, as you can see there. All eyes, of course, waiting for Draghi. I think he's speaking today. Yes, he is indeed. So that's why the market's quiet following Italy's elections on Sunday. It'll be interesting to see what he's got to say, and no doubt he doesn't want to shake things up a bit too much at the moment, but that's the reason why currency markets are quiet there. One other piece of news I'm thinking about is that this weekend the US moved to daylight savings as well, so I'll try and remind you of that on Monday. So we'll need to put the clocks forward an hour, I think, if I recall. I'll have it worked out by then. It's always a pain when this happens, and they're 2 weeks ahead of the UK as well before we move on to BST. In the daily of the pound, we've got prices still moving higher, but struggling with the 76% retracement there. Needs to break this if prices are to move higher. Simple as that. Interesting to see that yesterday also the volume was greater than the previous day as well. So some selling pressure around there at this level as well. And meanwhile, with the Dow, the market going on and filling the gap yesterday, did this in the first bar of the session. What do we mean by filling the gap? Before we look at the intraday, let me just have a look at the daily so I can show you. On Monday, I think it was, Cohen resigned. No, early hours of Tuesday it was. And then yesterday, the market gapped low. You can see the gap there. And it started to move down, but as ever they want the market higher, and they brought it back and filled the gap. So from where the market opened to the previous day's low, there was a gap, and the gap was filled. Simple as that. As it got the momentum to move back to the upside, who knows, but we certainly have a whole range of Fibonacci retracement areas here that will need to be taken out if the market is going to do this. So the detail of filling the gap yesterday, huge move there, 150 points in that bar, then a bit of selling, the market came down, and then up we went another 100 points, and then all the way back down. And again, that same picture as we saw before, retest of the lows before the market then ended up going back to create the double top there, straight back up in the evening session. The range and volatility is quite incredible in the Dow. Never seen it last this long. I've seen it, but I've never seen it last this long. And then the overnight, you can see the market is just trading in a 50-point range at the moment. So again, if you look at the daily chart, you can see this trying to move back to the upside there at the moment. But certainly a lot of range there. And what's odd is the implied volatility, because given yesterday's massive range, we went from 16.13 the previous day to 16.20. It's just bizarre. I mean, it's blatant manipulation, because this volatility shouldn't be this low. And certainly not after Cohen resigned and you end up with a gap of nearly 300 points. This should have spiked back up, without a doubt, but it hasn't. And again, it just goes to prove how manipulated these markets are at the moment. And as it says here, that stocks spike after White House, Mexico and Canada may be exempt from tariffs. So all of the hoopla that caused the problem and the gap was assuaged yesterday as the White House made this statement about exemption from tariffs. So the world's gone mad. It's gone mad. Anyway, in the Bitcoin sphere, we've been monitoring this, and it's been fairly accurate, I have to say. We've broken the trend line, and we've headed down and hit the 76% retracement here. There's weakness around at the moment. There's all sorts of rumors going around as well about who's selling it and whatever. but what we've got to watch is this level, because if this is taken out, then we are going to see this market move lower. That's for sure. It's going to continue down, and what we need to do actually, because what we've done here is drawn the 76% retracements from these 2 points here, there and there, and that's given us these levels. So what we'll do is put in the bigger levels as well. Let's see if it's in this one. It's not, or is it? Nope. Can never find these straight off. There we go. So what we could do now is actually go to the low here and up to the high here, and should that low be taken out, then oops, get rid of that, and then if it's taken out, you'll see you've got the 38, the 50, the 61 and the 76, and this will be the most crucial point here, because if this is taken out, then you're going to see the February low actually tested down here, just there. So that's another interesting level there. Let me just have a look at the bigger time frame. Yeah, that is the low that we had, wasn't it, over the big correction, the last correction. So yeah, very important area here, this low down here. So we'll just draw that one in as well, just in case that we do get a big sell-off in the market. Markets go down faster than they go up. You have the staircase up and the elevator down. So we'll draw those in and keep those in. But certainly, we just zoom in here, we've got a lot of support here, 76 and then 38 from that bigger retracement area there as well. Right, that will do it for this one. And yeah, like I say, let's see what happens during today, see if the volatility calms down a bit in the Dow. The pound struggling a bit with the upside, and of course Super Mario is speaking later on this morning. Right, that'll do it for this one. As ever, thanks for watching. See you in the next one.